Lenders will look at how affordable your mortgage payments will be before granting you a loan, so you might struggle to find a mortgage with low income. They'll examine your total budget and the size of the mortgage you want to borrow. They'll check if your income could comfortably cover your bills, your living costs, and the mortgage repayments. They'll also look at whether you'll be able to make repayments if your personal circumstances were to change or if interest rates were to rise. But all is not lost. In this video, I will hopefully cover a few ideas which may help you buy a property. I'll cover off deposits, types of income that can be used, and which mortgage schemes might be worth exploring. Hi, if we haven't met before, my name is Dan and I'm a CeMAP qualified mortgage and protection advisor. This video is purely for educational purposes only and should not be seen as advice or a recommendation to act. And I must stress, as a mortgage is secured against your home, it could be repossessed if you do not keep up with the mortgage repayments. Thank you to Bryony for this video request. I'll go over some of the basics of trying to buy a house on a low income. As your circumstances will be different from others, there is a lot of scenarios to cover, so I'll mention the basics, but please get in touch with me to discuss your specific circumstances. A lot of people are unaware that they can use benefits as income when applying for a mortgage. At the time of recording, there are a handful of lenders that will consider lending if you receive benefits only and do not have employed or self-employed income. Just be aware that with some of the lenders there are some caveats, such as a maximum loan to value and a limit on the type of benefits awarded to you. Getting a mortgage with a low income can be incredibly difficult. If you have a low income, you'll struggle to save a large deposit, which means you need to borrow more. But if you have a low income, you may not be able to borrow 90% to 95% of the property value. It's a bit of a catch-22 situation. So let's start with deposits. I'm not going to tell you to save more, that would be too obvious, but something I will highlight, you probably can save more than you realise. Part of my job is to assess customers' outgoings, and when I ask people how much they spend on certain items, they often or not underestimate them. It's only when we sit down and go through the bank statements that they realise their outgoings are higher than they expected. The most common one is food shopping. As an example, someone will say they spend £300 a month when it's in fact over £500 a month. Another is how much they spend on clothes. My advice to you is to go back through your last 3 months' bank statements and total up how much you spend on everything. This will help you budget going forward, as we're all guilty of overspending, including myself. If you're unable to cut back on your costs, there is the option of receiving a gift. This typically needs to be from a close family member, such as a parent or a sibling, but some lenders allow grandparents, aunties and uncles and cousins to gift you money. I see advice online to take a loan from parents, but if this is the case, then you need to declare this to the lender, as they'll need to budget this into your affordability. So if you are unable to get a high loan to value mortgage because your income is low, then there are a few schemes that you might wish to consider. I'll cover the main two for now. Let's start with Help to Buy. This is possibly the most mentioned scheme out of the two. This is where you put in a 5% deposit and the government contributes 20% of, or 40% if you're buying within London. This enables you to qualify for a 75% loan to value mortgage or 55% in London and access more affordable rates than a 95% loan to value mortgage. I have created a video on the latest Help to Buy scheme here, but please watch after this video in case you miss out some valuable information that I later provide. Something to note with Help to Buy scheme is the government portion of the deposit needs to be paid back. I go into detail about this in this video here. Next up, you have shared ownership. This is where you can put in a 5% deposit and buy as little as 25% of the property and rent the remaining 75%. So if a 5% deposit on a Help to Buy mortgage is too big, or you can't borrow the required amount at 75% of the property purchase price, then you can purchase a minimum of 25% of the property on the shared ownership scheme. You can, over time, then purchase a larger share of the property, which is known as staircasing. I cover this better in detail in this video. Another solution, which isn't an official scheme, is the Bank of Mum and Dad. You may or may not have heard of it. If you're fortunate enough to have parents who either have cash or assets, there is a chance they'll be able to help. As there are several ways, I won't do it any justice by covering it quickly in this video. But if you watch this video here, you'll get some ideas which I can elaborate on if you call me. Moving on to benefits. As I've mentioned previously in this video, there are lenders that will lend if you only receive benefits. Some lenders will factor in 100% of the benefits, whereas others may accept only 50%. I was going to list the benefits that can be accepted, but the list is vast and subject to change. So if you're in receipt of benefits and needing a mortgage, it's best to contact myself or another mortgage advisor to go through what benefits can be accepted and how much the lender will use in their affordability calculations. Also, if you're in receipt of maintenance payments, regardless of it's court ordered or not, these too can be used with some lenders. You also have the option to move to a more affordable area. This isn't ideal, but it doesn't necessarily have to be for long term. Once you're on the property ladder, making monthly contributions towards your mortgage balance means your equity over time should increase. This will hopefully help you save in the meantime for a bigger deposit using the equity within the property that you build up as a deposit. Something I'd like to highlight and save you time is talking about your credit history. If you're looking at obtaining a mortgage with bad credit, then you're highly likely going to need a 15% deposit or more. For more information on obtaining a mortgage with poor credit, watch this video. If you're unsure how good or bad your credit history is, I've put a link in the description below that allows you to take a look using a 30-day free trial. I've kept this video brief, but there is so much more to getting a mortgage on low income than what I've already covered. So please contact me. To avoid making the 10 most common mistakes when buying a home, watch this video. Remember, as a mortgage is secured against your home, it could be repossessed if you do not keep up with the mortgage repayments. Thanks for watching, and I'll see you next week.